The SEC just closed the case on AMC's wrapped crypto tokens, but the truth is far from over. What's going on behind the scenes, and why is this issue still so complicated? The SEC says the AMC wrapped crypto token case is closed, but what if they're missing something? Over 100 million wrapped AMC crypto tokens were traded, with no transparency, and this could have impacted AMC's stock price. Is it market manipulation? The issue with AMC wrapped crypto tokens was first uncovered in late 2023, but it wasn't until early 2024 that the SEC began its investigation into the situation. These wrapped crypto tokens, roughly 100 million of them, were discovered as synthetic representations of AMC shares that were being traded across the Ethereum blockchain. The intention behind their creation was to provide a liquidity alternative for institutional investors, but without the proper transparency or regulatory oversight. The discovery of AMC wrapped crypto tokens, backed by FTX, raised questions about their legitimacy. These crypto tokens were meant to represent AMC shares, but lacked the necessary transparency. The SEC recently closed the investigation, but key questions about market impact remain unanswered. Despite the growing controversy surrounding AMC's wrapped crypto tokens, AMC's CEO, Adam Aron, has remained largely silent on the issue. While some might wonder if there was awareness of these transactions, the focus remains on uncovering how these crypto tokens were issued without proper transparency. As the SEC closed the case, many questions about potential market impacts and the involvement of major players still linger. Was the stock price drop a result of these actions? And if so, how does it reflect on those leading AMC? This issue goes beyond one individual. It's a call for transparency in the entire market. Even though the truth is clear as day on the Ethereum blockchain, it's like a smoking gun left out in the open, but they claim it's invisible. The key speculation surrounding this case is whether the actions, such as the creation and sale of these wrapped crypto tokens, could have impacted AMC's stock price, potentially leading to market manipulation. While the SEC's decision claims there's nothing worth investigating, the possibility remains that these actions played a role in suppressing AMC's stock value, leading to questions about the fairness of the market and whether retail investors were at a disadvantage. Should it be allowed for the crypto market to impact traditional stock prices like this? Should there be clearer rules to prevent these kinds of effects? The financial damage here is significant. It's estimated that these 100 million wrapped crypto tokens could have been worth over $1 billion in total trading volume. This massive volume had the potential to artificially inflate or deflate AMC's stock price, further exacerbating the volatility that retail investors faced. The fight isn't over. Just because the SEC says the case is closed, doesn't mean the truth disappears. It's like the lights might be turned off, but the truth still lingers. The next step is to demand more answers through a FOIA dispute with the Office of Government Information Services, OGIS. You might be wondering, what exactly is a FOIA dispute? FOIA stands for the Freedom of Information Act, a law that gives the public the right to access records from the federal government. It's a way to get the government to release information they may be holding, especially if that information might shed light on something that was not fully transparent. In this case, we could use FOIA to request documents or communications from the SEC about their investigation into AMC's wrapped crypto tokens, so we can see exactly what went wrong, or if they were covering something up. So, who's been held accountable? The sad truth is that no one has been truly punished yet. The institutions behind the creation of these wrapped crypto tokens, particularly those involved in FTX's operations, have yet to face the consequences. Retail investors, on the other hand, are the ones left dealing with the fallout, seeing their investments affected by this lack of clarity and accountability. We've seen how hedge funds and FTX have played fast and loose with the system before. It's like a game where the rules are constantly being rewritten. Just because the SEC says the case is closed doesn't mean everything has been resolved. The fight for accountability continues. Stay tuned, the next step is coming, and this journey for transparency isn't over yet. Remember, this post is brought to you by Cryptochrome. Like, follow, share, and repost this video if you believe that crypto is the future, and the future is now.